Hey, welcome guys. G'day and welcome to Monday, the start of a new trading week. It's always exciting. I hope everyone had a great weekend. I know I did. Celebrated my birthday, which was amazing. So it's time to get on now and look to have a successful trading week. Just a small heads up that I won't be around on Wednesday due to a funeral for a mate of mine who passed away, sadly. So I'll be traveling during that period, so there'll be no midweek market meetup in the Ash Capital Discord on Wednesday, and I won't be doing any analysis for Wednesday. All right, so just keep that in mind. All right, let's get rolling. We'll jump over to the calendar first. Let's go and check it out. Quiet on the news front to start the week. Monday and Tuesday, no news. All right, so when it comes to trading today and tomorrow, we just want to trade with a bit more caution, a bit more patience. Make sure we're really looking for the ideal setup, and we're also waiting for market open. So 9:30 for indices, 9 a.m. Eastern time for commodities. All right, so we just take our time, be patient, and look for clean setups. All right, let's jump over to the charts. All right. Let's jump out to the daily on NQ. I already had this one marked up from earlier today. I really like this level actually, because we actually have external and internal liquidity aligned. For me, that's a really good sign of a potential bounce from that level, because we're moving into the daily bullish FVG, and we've also swept these lows. So that looks nice for me. So I'm looking from a move from internal, okay, or external in this case, because we swept these lows, and then moving higher. And our nearest liquidity point here is internal. So that's what I'm looking for to start the week. This will be a target area. I'm not saying we'll get there today, but we might. But this is my idea for NQ, so I'll just clear these up. So bullish daily idea on NQ. Clear that, move to the hourly. So we're still tracking down here. If we look at the curve, I actually like that. If you look at these lows here, this is the sweep we had, and you can see that this is the buy side of the curve, and this was the sell side of the curve. Oops. So market maker sell model, and sweeping these lows feels to me like it's completed its objective. And we had consolidation, our move lower, consolidation, move lower, consolidation, move lower. So that's the stages of the MMX model completed. So looking now at the structure here, if price is able to move higher here, and we can get, this is the leg that's taken liquidity into our area of interest. So this is the leg that I'm using to look for a change in the state of delivery. Now you don't need to have a change in state of delivery. That can be a confluence only. If you have a bullish bias and you find a bullish entry function that is aligned on the hourly as well as the daily, and then your entries on the 5 minute, then you can take that trade. There's no right or wrong answer there. Some people want to see this change in the state of delivery confirmed before they'll look for longs, others don't. So it's really down to the individual. I'm just pointing it out that this would be where I'd look for the change in the state of delivery. All right. At the moment, the only real bullish indication we've got for me is that we have respected this hourly bullish FEG. So price has come down, wasn't able to close below it, and has pushed higher. It's also had a nice rejection here on this 3 o'clock candle, right off the mean threshold of that FEG. Beautiful rejection there. So that's a good sign. I like that. We also have these equal highs here, a nice draw on liquidity, and also these equal highs here, which would also be a nice draw on liquidity. So I do like that. And then of course, if we are to push higher, we have all this lower resistance liquidity up here. So I like that sort of idea on NQ. This is the leg that's taken liquidity. So what we can also do is we can run our standard deviations from here to here, and we can see that that we get this negative 2.5 nicely aligned with our low resistance liquidity, and this high here also, which is looks like a significant high there. We've got lows on this side, what's the low on this side, so that's standing out for me as a nice target, and it's perfectly aligned with the negative 2.5. It doesn't really get much better than that. So that's the idea I'm liking on NQ right now. Let's jump over to ES on the daily. Get rid of that. We really did reach down into discount here, didn't we? If we look at this area here. So there's our discount, there's our premium. When we had this internal level here, the price reached down into. So price failed to support at this swing, failed this internal, it failed this internal. In other words, it didn't respect any of these levels, but it has finally starting to look like it's respecting a level of liquidity here, which is this internal, which is in deep discount of the dealing range. So I like that. And then, the idea of moving from internal to external. So external is up here. Obviously, we've got a bit of work to do. We've also got these internal levels here that price will need to get through first before it reaches this high. So we'll just keep an eye on this, and And we're going to say that we're bullish on the daily. On ES, let's drop to the hourly. Similar story here to NQ. We've got low resistance liquidity here, or relative equal highs in this instance, whichever way you want to look at it. Whereas if you remember, NQ had equal highs at that level. Same thing again here, NQ had relative equal highs. And we've got, you know, it's probably, if I drew this out from here, I would say that's relative equal highs with low resistance liquidity. It's a nice draw. Again, this is the leg that has swept liquidity. So I would look for this level here for a change in the state of delivery. And then if we run our standard deviations, we can have a look for some potential targets. And here we've got this LR aligned with the -1, which would be a first target. And then, you know, essentially we've got these highs here aligned with the -2. So again, I'm liking the idea of bullish. We don't need to see the change in the state of delivery. You know, if our bias is bullish, and in this region here somewhere, we get the makings of a setup, then, you know, if your bias is bullish, you can take that trade. You don't need to wait for the change in the state of delivery. That's really contingent on the individual. Right, oil. Let's clear that up. And we're going to go to the daily. Okay. Interesting. So this internal level, it's also aligned with a swing low. So I do like that as the idea of moving higher. We have a lot of liquidity rest in here. It's quite a sell-off on Friday. I would like to see, based on this recent information, that price will at least try and reach up into this area today. We'll just have to wait and see. So we're going to work with what we've got here. Although this candle was quite heavily bearish and it closed with no wick to the downside, it didn't close through this internal level. So at this stage, I'm still looking at it as respecting this internal level and this swing low. Price can come down here, of course, and potentially sweep lower before continuing to move higher. So we'll just keep an eye on that. But based on this, I'd be looking at a daily bullish bias on oil. Jump to the hourly. I mean, price has swept a lot of liquidity down here. And it's picking up a little bit more. So there's no bullish signs here just yet. So on the hourly, really need to see price starting to turn around if we've got any hope of getting higher here. So you can see the price has just continued to respect bearish PD arrays as we've moved lower. High resistance liquidity. High, low, higher, high, bearish breaker. FVG aligned, entry. So there's an hourly bearish unicorn that just played out absolutely beautifully. So if we were to run our projections from this high to this low, so we've actually closed below our max extension. And you can see prices consolidating a bit after that. So at the moment, I can't say that I would be bullish on oil on the hourly. I have a bullish hourly bias, daily bias rather. So until my narrative and logic is aligned with my daily bias, then I wouldn't even look to take an entry. At the moment, it's bearish structure, so we stick with that idea. We just watch CL today until we see something significant. If we were going to look for a change in the state of delivery, I'd be looking at this level here. Okay, we'd have to come back through that, obviously sweeping an important level here to see that confirmed change in the state of delivery. All right, so bearish on the hourly, bullish on the daily, so not aligned, no trade. Okay, let's go to DXY. Okay, so DXY's bias is still playing out from last week, looking from external to internal. Okay. So nothing changes here for me. Remaining bullish on DXY. So bullish on the daily. Now let's go to the hourly. Again, price respecting bullish PD arrays. Twice this level's been respected. Coming close to it again. Be interesting to see if this level holds. This one, that is. And also if this hourly can hold here. There is essentially relative equal lows here, which might be acting as a draw pre-market. We'll see. Sorry, pre-market open. We have created some high resistance liquidity here as well. So if we were looking at that, or if we looked at this as a sweep here, okay, as a stop hunt, high, low, higher, high, then this would be a bearish unicorn, bearish breaker rather, plus an FVG. Aligned with it, we've got the opening gap, which has been filled now. So this will be interesting to see how this plays out because we've technically got a bearish reversal unicorn function here on the hourly. And if we run standard deviations, you can see that we're aligned with some LR down this side. So high resistance on this side, low resistance on the other side. That's what you want to see. We're going to have to see now if price has a willingness to continue to be supported by bullish PD arrays. If not, then we may see price push off here and move lower. So because we're stuck now between two opposing PD arrays, so we've got bearish on one side, bullish on the other, price is in the middle of this, I would remain neutral on the idea of DXY on the hourly chart. All right, let's move over to gold. Gold's bias played out last week, which was nice. Let me zoom in a little bit. So we went from external. This is our bias last week, from external, and we wanted to reach to internal. This is our internal level, and we did. We tapped straight into that beautifully. So with that in mind, at the moment, this is our highest external level, our closest external, internal to external. So I'm looking for prices to move higher. So daily bullish bias on gold. Let's drop down to the hourly. Interestingly, again, like if you look at this curve, almost feels like it's incomplete. And we have high resistance liquidity here, low resistance down here, right the way through. Standard deviations, yes, we're at the -4 right now. But if you look at the market makers MMXM model, you know, we've had our first consolidation, expansion, second consolidation. Like, it was a large expansion. You know, so there's potential here for this to actually continue lower and grab this low resistance liquidity. So yeah, okay. We'll just have to keep an eye on this. If we see a close above here, then that level there, that would be our bullish change in the state of delivery. In fact, it's probably going to be, at this stage, this is a high. This is the leg that took liquidity, so it's probably more likely up here to see a bullish change in the state of delivery, unless we get, you know, another leg down that comes below this low and then a move higher, then we can reassess that. We're still bearish on the hourly. Again, price is respecting bearish PD arrays, and until we see some clear structure shift here. I couldn't say on the narrative and logic side of things that we're bullish just yet. So we need to just be cautious here, be patient, and keep an eye on this market structure, because with the daily, you know, we're looking at internal to external, so we are bullish on the daily. Right, so we'll just have to see what open brings for some price. All right, guys, I'll wrap it up there. I hope you were able to get some nice insights into the market today. I will be back again tomorrow. Please like and subscribe. I really appreciate it. Getting some traction, which is really nice. Make sure if you want to get an eval, you grab a starter pack from My Funded Futures. Use code Jimmy. Best value at the moment, you can get that for $76 for a 50k eval, and that's it. It's all in. Once you pass, there's no extra fees. You can also still jump on Apex. They've got 80% off. I'll be able to use some Apex evals this week on some news to try and expedite those evals. But we'll see how we go. All right, guys. Also, remember, grab my book. It's down in the description there. Just follow the link and have a read. All right. Thank you, guys. Until tomorrow, have a good trading session and be safe. Catch you guys.